Start with the recording. All right. One sec. Right. So let's see now. So this is your test preparation. Your test preparation session that we are doing now. For accounting 1A. So it's a test preparation for accounting 1A. And I'm going to outline the topics of note that the lecturer stated you need to be aware of. Right. So number one, chapter one, obviously, according to your textbook, and that deals really with introduction to business. Introduction to business, a bit of bookkeeping there, and accounting. Okay, we're going to look into that, but it's purely theoretical. What chapter one deals with, right? And then chapter two is what I'm going to deal with the more in tonight's engagement. So obviously it deals with the accounting equation and the double entry system. And lastly, chapter three is also another important chapter of note that you need to be aware of with respect to the upcoming test. So that chapter deals with value added text, course, and some source documents of note as well that you need to be aware of. So these are the essential topics, right, that you said you need to be equipped on with respect to the upcoming test.
Yes.
100%. No problem. Just a second. I want to actually. Okay. So chapter one, we'd already began to look into it previously. We even looked at, I think, was it the task?
Sorry?
Was it the task?
Yeah, I think it was the task.
There was a task that we were doing, right?
Yes.
There were two important tasks that we covered, and somewhat they sort of like helped you to grasp a bit of summary with respect to bookkeeping and accounting, right? So, but let's start from there anyways, so that we don't leave any stone unturned, right? So, having said that, what is it that you need to draw concerning chapter one, dealing with introduction to business, bookkeeping, and accounting? Not a problem. So, okay. So from chapter one, there are different forms of businesses of note, different forms of businesses, which I'm going to talk about shortly. And also, of course, I want you to also understand the distinction or the distinctive difference between accounting and bookkeeping, because the two, they are not the same, but they work, together. You need bookkeeping in order for you to create financial records or accounting information. Are we together there? Right. So, but before we get to the different forms of business, one of the things that we would like to first start with, just so that I can also be consistent to your material, we're going to look at the first thing being the uses of financial statements before we can talk about bookkeeping and whatnot. We've already explained what accounting is before, or would you want me to take you through that again? Or are you sorted?
Please, can you take me through it again?
Oh, you want me to take you through that? All right.
Yes, please.
So the first point of departure is to say, what is accounting? Right? What is what? Accounting.
Accounting.
Right. Very, very important. So I'm gonna try and give you a clear and simplified definition of what accounting really is. Okay. So accounting can be defined as follows. So it's a science of identifying, recording, and communicating financial information about a reporting entity. In fact, can I break this down? Identifying and communicating. What are we communicating? Financial information about a reporting entity to its interested users. Very important. I'm trying to simplify what accounting is for you. Are we together?
Yes.
Right. So that's what I'm trying to do there, so that it doesn't become, or it doesn't look extremely complicated, because it's one of the most simplest and clear and straightforward definitions. Okay, right? So this is what accounting is. It's a science of identifying, recording, and communicating what? Financial information, or sometimes they call it financial records, about a reporting entity to its interested users. That's what accounting is all about. So when you look at accounting, what it would involve source documents. And from the source documents, that information would have to be captured in journals. From the journals, we need to draft what we call general ledger. From the general ledger, we have to draft what we call a trial balance. And then from the trial balance, you draft what we call annual financial statements. So what I'm showing you there is what I call the accounting process.
Yes.
I'm explaining that for a reason. So accounting process begins with source documents, subsidiary journals, general journal, trial balance, annual financial statements. What are these source documents that we are referring to? Let me give you the different source documents there is. So a receipt, for example, when you go to a shop and you buy something at Checkers, they give you a receipt slip. That receipt is an example of a source document. Delivery note, it's another example of a source document. An invoice, normally they call it a tax invoice. All right, it's another typical example of a source document. And then you also have something called just a random purchase invoice, or let me just say invoice to make it easy. This one, you normally get it when you are buying. Tax invoice is the one you issue when you are selling, okay? And then you would have something like bank statement, for example. It's another form of source document, bank statement, but it's an external source document, okay? Credit notes, EFT, receipts or payment sometimes, right? And also checks, but not all the time, especially in this modern day. What am I giving you? These are typical examples of source documents. Then subsidiary journals would be something like this. because these are things you're going to come across. All right. Subsidiary journals would include things like a cash book, which is made up of a cash receipt journal, a cash payment journal, sales journal, purchases journal. All right. There's something called a sales returns journal. There's something called a purchase returns journal. All right. There's also something called a general journal, just to name a few. Then, of course, there's a petty cash journal as well, just to name a few. And then, of course, when you're talking about, let me add other information here on the other side. So when you're talking of general ledger, what exactly does that really mean? So there are different types of ledger accounts, okay? So GL. So general ledger is what it stands for. Okay, which can also be abbreviated GL. So in the general ledger, these are what I call account balances, all right? These are what we call what? Account balances, and there are several of them. Okay? Such as what? For example, you would have the bank, you would have a sales account, you also have a purchases account, you would have, depending if it's purchases, you might also have a trading inventory account, or you could have cost of sales account, just to name a few, right? So there are several. So there will be more like T accounts, which looks like this. So the general ledger, it will look like this. For example, if sorry. So in the general ledger, you'd have something like this. So you have bank over there. So a general ledger, it will be a T account with the debit side and the credit side, okay? So there'll be entries that will be captured here. Now I'm showing this because a bank is an asset. It will increase on the debit, it will decrease on the credit. So there'll be transactions, entries that will be made or captured in the debit side of a bank account, also on the credit side of a bank account. The same thing is true even when you open a sales account. It will look like this with a debit side and then a credit side. So with sales, because it's an income, it will increase on the credit side and it will decrease on the debit side. When you have cost of sales account, which is an expense account, with expenses in the general ledger, it will be like this. So with the cost of sales, it increases on the debit side, it decreases on the credit side, something like that, okay? So when you're talking of GL, this is what we are referring to. It will be a T account like this, but with different accounts like bank, sales, cost of sales, and all of that. So that's what would make up a what? General ledger. Now, these accounts in the general ledger, they would have to be captured somewhere, which is called a trial balance. But in the trial balance, what you are having there, my young man, it's basically summary of accounts. So when I look at a trial balance, because I want you to understand these things, this is our building foundation. A trial balance is basically a summary of different general ledger accounts in one document. That's what a TL is, general ledger. Now, how would a general ledger look like? Just so that I give you perspective, a general ledger, sorry, a trial balance rather. So a trial balance would look almost like this, just to give you a typical synoptic show of how it would look like. So it would have what we call debit column, and then it also have your credit column, something like this. So you'd have several different accounts there. It could be, for example, maybe I'm just giving this as an example. Would they have sales there? Maybe cost of sales, you know, inventory, anything you can think of. So now, what is it that you see in the reflection of a trial balance? It's a summary of these different ledger accounts. So with sales, obviously, the entry would be on the credit side, that balance that you would have transferred from the general ledger. Whereas with the cost of sales, it will be where? On the debit side of your trial balance. Inventory, it's an asset, it will be on the debit side, something like that. So you'll have several accounts listed in the trial balance. And then what about the last part, which is financial statements, which is financial statements. Very simple. So with financial statements, young men, here is the drill. Right, do it this way. Right, so with the last part of it, which is annual financial, so it's annual financial statements, all right? There is what we call, I'm going to abbreviate on this. So there's a statement of financial position, there's a statement of profit or loss and other comprehensive income, which is SPLOCY. There's a statement of financial, so statement of changes in equity, and then there's a statement of cash flows, something like that. These are the three sets of financial statements. But I'll talk about that later. For now, for the purpose of what you need to know for the upcoming test, I don't need to give you details on this, right? Because it's a different topic altogether. I think in topic 6 or 5, that's where you'll be introduced to this. But for now, don't need to worry about that. So far, so good?
Yes, 100%.
Wonderful, wonderful. Right. Save this. Save that. Okay. Now, having said this, I've explained to you what is accounting, just to give you the basics of it. Now, what I want us to get into is the concept of double entry accounting, right? Double entry accounting. Maybe let me leave that one for now. Double entry accounting. I'm going to talk about it as chapter 2 altogether, but I want to finish off with chapter 1 in its entirety. So I'm going to continue to talk about some things more related to what we are dealing with in chapter 1. Now, young men, go on page 4 of your textbook. Page 4 of your prescribed textbook.
Yes, I'm on the page.
Right. So on page 4 of your textbook, they talk about what we call users, all right, of financial statements. Do you see that?
Yes.
So users of financial statements, there's quite several of them, okay? And they use the financial statements for different reasons. So for instance, let's start with the first one that you see there, investors. All right, so there's investors. The second one is what? Employees and labor unions. Employees and labor unions. I'm going to talk about them. And the third one is what? Lenders, meaning to say people that provide loans to the business. There's what? Suppliers. And who else? And other trade creditors. And number 5, we've got customers as well. They're users of financial statements, management. Oh no, before management, there is government. and their agencies. Okay, so I'm going to discuss about this just shortly. And then there's the general public. And lastly, there's what? Management. All right. These are users of financial statements or users of accounting information, right? Users of financial statements or users of what? Accounting information. So when we are saying these are users of financial statements or users of accounting information, it means these individuals or this group of individuals, they need this information for them to make decisions that either affect the business that is reporting the information, or that would affect them, these people that want to use that information. So the reason why these are called users of financial statements or users of accounting information is because the decisions that they would make, it would either affect them or it would affect the business that they are dealing with, which is producing or reporting the accounting information in the first place. So let's start by investors. What is the interest of investors when it comes to financial information? So if you look then on page 4, they tell you that with investors, these are the people that provide capital, all right, for the business to start or for the business to continue. Are we together? If it was already existing. Yes. So with investors, they fund the operations of the business. So they are interested in knowing whether they would make money if they invest their money in that business. How would they know if they would make money? That's the use of financial information there. Financial statements, accounting information. So when they get the financial statements, they'll be able to see if the company is doing well, whether it's making money for itself enough to be able to also pay the investors that they've put in their money into the business. So that is the interest of investors in a company. What about employees and labor unions? What about employees and labor unions? Why are they interested in the accounting information of the business? So with employees and labor unions, it has to do with their employment, all right? So for instance, labor unions, they are there to protect the employees within an organization, whether it's in the public sector, whether it's in the private sector. They are labor unions, and their purpose is to protect the interests of the employees in the organization. So obviously, employees are interested in the accounting information so that they know whether they've got job security. Are we together, young men?
Yes.
Right. That is their interest in the business. They want to know if they have what? Job security, right? What about the lenders, people that provide scholato to the business, or that provide loans to the business? What is their interest? They're interested in knowing whether the loan that they're giving to the business would be paid back by the business. So they want to test or to know by looking at the financial accounting information of the organization. They want to assess whether the organization will be able to repay them back their money. That's what the interest of lenders in their business would be. What about suppliers and other trade creditors? So the suppliers would want to know if the amount of money that the business would owe them, if they give them maybe goods on credit, they want to know whether the business will be able to repay their money back for the goods which they sold to the business on credit. Cascolot. That's what suppliers are interested in. So if they sell something to you on credit, they want to know whether you will be able to pay them back. That's the interest of suppliers and other trade creditors. What about customers? All right, with customers, what is their interest? When they look at financial statements of a company, they want to know whether they would still be able to continue buying goods from that company or requesting a service from that company. That is the interest of customers. So they're interested in the going concern assumption of the business in question. What about government? Government is interested in the financial accounting information of a business because they want to ascertain if the business is operating according to the law. They want to know if the business is operating according to the requirement of the law. That's what government and their agencies are interested in. And they're also interested in whether the company is paying tax. Okay. What about the general public? What is the interest of general public when it comes to financial statements or accounting information of a business? Look, when you do business, obviously, you don't do business in isolation. It will involve people, and people, for instance, customers, it's part of the general public. So they want to know what welfare, what contributions are you making to the society at large. That will be the interest of the general public when it comes to the financial accounting information of an organization. Management is interested in preparing the financial statement itself, and also, of course, ensuring that the accounting information is produced and presented to the interested users of such information. Are we together?
Yes, 100%, yes.
Yes, sure. Right, let's continue. Now, I want to talk about something else now, the different forms of businesses. Different forms of businesses. I want you to go on page 10.
Yes.
Are you there?
Yes.
Okay. Now, before I go to page 10, I want to talk to you something about the following. I want to talk to you about the qualitative characteristics of financial statements. You need to know this, Tawa, okay? Now, the qualitative characteristics of financial statements, there are two of them, okay? So you've got what they call fundamental qualitative characteristics that you need to take note of. There are two, like I mentioned. What are they? So number one is what they call relevancy. And then number two, there's what they call faithful presentation. The second group of qualitative characteristics, it's called enhancing qualitative characteristics. There are four of them on this one. What are those four? Number one, information should be what? Comparable. So that's what we call comparability. Information should be it should be understandable. Okay, so that's understandability. Information should be verifiable. So it means it should have verifiability. And lastly, it should be generated on a timely manner. So there is timeliness that needs to be observed. Very important. What I'm showing you this, they can ask you in an exam. Are we together? They can ask you to say,
yes.
Maybe in a multiple choice question, identify enhancing qualitative characteristics on the list below. Then they combine first three of these, and then they take one from there.
Okay.
And maybe the question says, identify an item that is not an enhancing qualitative characteristics. So they take the first three, and then they take faithful presentation. So the answer obviously to be faithful presentation in that case. Are we together? So you can get a question along this in a multiple choice question setup. That's why I'm showing it to you, okay?
Okay.
Right. Now, having said that, let's continue to the other part.
Yes.
Now, I want to talk about the different forms of businesses. Different forms of businesses. So there are different types of businesses that one can actually start. So there's what we call a sole proprietor. A sole proprietor. Are we together? Or sole traders?
Yes.
So a sole trader is the type of a business that is formed by one individual. So everything that concerns that business it's affecting that one particular individual. So there's a sole trader, there's a company. Now with companies, we've got two groups of companies that you need to take note of. All right. So with companies, not two groups actually. Yeah. So with companies, I want you to look at this, young man. With companies, there's what we call public companies. And there's also what we call private companies. And there's what we call non-profit companies. Are we together?
Oh, yes. Okay. Yes.
Very important to take note of that when it comes to companies.
Okay.
Any questions so far?
No questions. I'm fine.
Okay. 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 Right. Then another form of business is called a partnership. Now, I'll tell you what you need to know for exam purposes, okay? It's a partnership. Then there's what we call a close cooperation. Right. Pretty much that. I think that's what you need to know. Now, what is examinable from that? So when I'm saying what is examinable, I refer to that as assumed knowledge, okay? When I'm saying what is examinable, I'm simply saying what is, so when I'm saying something is examinable, I simply mean assumed knowledge, okay? Or maybe we can put it this way. Assumed knowledge, I'm simply referring to something that is what? Or information that is examinable, right? So information that will be examinable about those things, basically the advantages and disadvantages of these. So for example, they can ask you maybe to give 2 advantages of starting a sole trader or 2 disadvantages of starting a sole tradership, something like that. Are we together?
Yes.
Right. Same thing is true when it comes to companies and all. So they can ask you something along those lines. So far, so good?
Yes.
All right. Any questions for me so far? All right.
I think I'm fine. I'm fine.
Okay. So now let's start with the sole trader because you need but I don't want to take too much time on this because this remember they've already given you a task about it. So you need to revise your task, okay? So I'll put here in brackets revise the class tasks, right? That we did already the last time in one of the lectures. So if you watch that video, obviously I discussed that with you. Now go on page 15, young man. Or okay,
Yes.
before we go there, do you understand the difference between a sole trader and a company, a partnership, and a close cooperation?
Yes, a sole trader is just one person that's running the business as CEO, and then the rest of them have more than one members.
Yeah. So,
I'm
like
not
for
sure.
instance, okay, with a public company, I think just so that I can help you understand the differences here. Maybe let's
Yes.
start with the public company. I'm just going to try and explain it for you in brief. So with the public company, it's one of those companies that is expected to. So with public company, they issue shares. Like, let me try to use a different color. Oh, right. So public companies, one of the key characteristics about them, they deal in shares, okay? Private companies, they don't issue shares, even non-profit companies, they don't issue shares, okay? That's very, very important to remember that. So under the category of public companies and private companies, these are what we call profit companies according to page 13 in your prescribed textbook.
Okay.
Page 13 of your prescribed textbook. There are two broad categories that they've given you there, which is a category of profit company and a non-profit company. So profit companies, they are essentially incorporated